Welcome everyone to my new episode related to Bitcoin's price analysis and technical details. Today we're going to take care about the markets as rationally as possible. This is part of the daily video series related to the technical side and the data side of the Bitcoin. We're taking care about the charts in a short, straight to the point video presentation in order to be as efficient, accurate as possible. 24 hours volume is $92 billion for the whole space for the past moments, and this is slightly below the averages when we consider the context, which is a rally in a bear market. Market cap at $1.3 trillion is something decent at these levels. Now, the great aspect is the difference between the Bitcoin and Ethereum, folks, for the past 7 days. We have Bitcoin on 8.41% increase. Ethereum is in plus 0.36. That's a distance of 8%, which Bitcoin is performing better. Now that's great to hear, folks, especially during the current market conditions. Every single time in a bear market, the altcoins will suffer more. When the bull market steps in, BTC takes the first steps, does the major increases. That's the gate where the fiat money comes in. The second cycle of the bull run, the second part of the bull run, is where we have a mixture between the altcoins and the BTC increases, like a competition, folks. But then the third cycle is when altcoins can do 200-300% more increases than what BTC does. Attention please. So going towards the charts, 1 hour candlestick for our representation today, this is where we are for the Bitcoin. We did a breakout, and I'd like to explain you the context. So the breakout, we've been broken, it's been going fine, but there is a context here that has to be very well explained. So as of now, we're sitting in a range that looks like this. In other words, we're sitting in that rectangle. Even though we have this rally pushing us upwards, it is still not changing the rectangle. This rally represents a 14.26% increase for the past 3 days, which is quite a lot for something that is during a bear run. Now, like I've told you, there are always movements, even up to 35-40% upwards during bear markets that are considered rallies. So the context right now is coming after a breakout of the ranging structure resistance trending line. That was very powerful, folks. We did broke out. We also broke out of the golden pocket, which is in between the two orange lines represented here. And we have been facing resistance at the range top. Now we have been pushing into the range top and finding already selling pressure over there. That was pretty significant by looking at the wick on top of the green candle. So that's something great to be considering. There is also here something that we have to have it in our back of our mind. The fact that the markets are just going up to grab liquidity, and we've been taking out this liquidity tops with this specific movement. So we're sitting pretty comfortable right now in our positions, although longing it from here is not the safest option. Meanwhile, the real liquidity is going to appear above this wick, right? So there is that wick, that shadow above that. There is a strong and real liquidity from where the markets could trigger a massive selling pressure. So even at this time, we're still in a place which is fully imported, fully filled up with selling pressure. It's the ranging structure top. It's that strong resistance in between the two blue lines that I have, acting like a zone. We've been pushing very well into our resistance from where we've been finding selling pressure. Pretty obvious. So we're gonna take a look what's gonna happen here for the next moments. Probably the next 48 hours, 72 hours will be completed with a strong decision, which will either reverse the markets for here at least towards the golden pocket, because we have here a liquidity that has to be grabbed as well. We have this order block which has to be taken out. So there are things on the lower side of the markets that gotta be still taken out. And then there is a liquidity gap here. So I would not rush into longing here at all. I would not rush into that. I would definitely long the markets after they're coming on a decrease channel, right? So that's very important to consider. And for the current situation, that's pretty much all that we have compared to yesterday. This is something significant to be updating about. That's pretty much all, guys. Feel free to subscribe to my channel, and for those of you that have been wondering about my one-to-one coaching directly with me, feel free to check out scrembocoaching.com. My page is describing how it works. It's just a page describing how it functions with a video explaining as well. This is a intense private coaching directly with me on Zoom conversations between 4 to 6 weeks, where I'll take you by hand and teach you how to trade. So feel free to register now to find out more about the offer as well, for those of you looking to join my movement in terms of commission trading without any upfront costs or fees. It's just pure commission out of the profits achieved. We're doing API trading basically. We have the results on the left side on the screen since September 2017, and then on the right side we have the way you can participate and join us. For the moment, that's pretty much all. All the links can be found in the description area or comments area right below the video. Make sure to click the official links, and you have them right here as well in the video. Feel free to join us. That's pretty much all, folks. Have a beautiful time. We'll talk to you soon.